questions. A strong performance coming in from GMM Pfaudler in the fourth quarter. India business saw a healthy 30% growth, while their order intake is also looking good. It's increasing. And the company says they're on track to meet their FY25 guidance as well. Tarak Patel is Managing Director at the company. He's joining us right now to take some questions. Tarak, good to have you with us here. Thank you very much for your time. You know, in the earnings presentation, you outlined that you basically will need to grow revenues at about 14% to reach your FY25 top-line numbers. And of course, you put out a margin of EBITDA number as well, which should grow a little over 20%, 22% or so. But this implies that EBITDA margins will go up to about 17% from the current 13.5% by FY25. So I just want to start by asking you, how will you achieve that? How will you go from 13.5 to 17% in the next 2 years?
Yeah, so the guidance that we've given for 2025 is 3,700 crores of top line and 630 crores of the EBITDA margin, which obviously translates into 70%. So I think we are definitely on track to meet the revenue target. We will probably achieve the revenue target much quicker than expected. On the margin front, we are definitely on plan as well. So we did about 430 crores of EBITDA, next year around 530, and then obviously 630 the year later. We are seeing a bit of, let's say, headwinds in the chemical and pharmaceutical markets at the moment, but we do believe that this should turn around quite quickly. We do believe that the reordering cycle in pharma especially will start picking up maybe by the end of this calendar year as well. Internationally also, we are working on multiple different initiatives that will help us also improve the margins. We're seeing also a cooling down of input costs, right? So metal prices, energy costs, some of the chemicals that we use for the glass lining process are all stabilizing and reducing as well. So this should also have a positive impact. On top of that, I think, our technology, our market, the position that we have will definitely help us improve the profitability. And I think going forward, we are quite confident that the margins that we have kind of guided for should be very easily achievable.
You're saying you will be at 17% by FY25. Mainly input costs cooling off and market positioning, which gives you an advantage, I'm assuming some pricing power.
Sure. So we said that we'll be at 630 crores and we will be at 630 crores. Is that going to be 17%, 16.5%, 17.5%? I'm not too sure, but 630 crores is definitely something that we will achieve.
So you are also ramping up your non-glass lined equipment business, right? Through new acquisitions, some expansion as well. Tell us a little bit about the inorganic plans. Any more on the cards in this calendar year itself?
Yeah, so we did 3 acquisitions last year. We acquired a company in France called Mixel, which is into agitation. We acquired a small engineering company in Italy and a US small services company as well. So mixing for us is something that we're focusing on. We're trying to create a global brand in the mixing space. Mixing, as you would know, goes into multiple range of industries. Besides chemical and pharma, it really diversifies our the portfolio as well. So mixing is something that we're really focusing on. It's the technology play. So the margins are as good or even better than glass lining, right? So that's a focus for us. We probably are looking at one more acquisition in this space in the US market. So I think once that gets done, I think we can consolidate the mixing, the portfolio and really create a global brand and then push that and try and grow that brand into something that's quite large as well.
So when you say one more acquisition, what is the kind of money that you have, laid out, the kind of war chest that you have for these acquisitions? And will it largely be funded from internal accruals or would you be looking to take on any debt?
Yeah, so this is really a very small acquisition, $5-6 million range. So really not really going to make or break our financial position. So we should be able to do this from internal accruals. Usually when we make acquisitions, especially in Europe and the US, they are 4 times, 5 times multiple. So we buy them cheap and then we try and use the Pfaudler network to really grow these small companies, right? So that's really our play when it comes to acquisitions.
Got it. Tarak, could you run us through what is the current order backlog? How is the pipeline looking into FY24? Is it accelerating at the margin compared to what you saw in FY23? And what's the percentage share you have in the glass-lined equipment business and how do you see that going forward?
So our current backlog on April 1st was around 2,200 crores, which is about 12% higher than previous year. So let me just kind of break up the backlog. So our international business has a stronger backlog as we speak. It's about 8 to 9 months. In some geographies like Switzerland and in China, we have 12 months to 18 months of backlog, right? So we have visibility. In India, it's about 6 to 7 months. India, we are seeing a bit of a slowdown when it comes to chemical and pharmaceuticals. But like I said, I do believe that this is not really a trend. This should kind of be reversed over the next few months. From all the companies that we've been speaking to, they have plans for investment. I think pharma is now seeing a reordering cycle that will kick in as well. So I think both chemical and pharma in India will kind of eventually the turnaround, maybe by the end of this calendar year, or maybe earlier. So I'm not really worried about the backlog. We have enough of backlog to get us through the next 6 to 8 months. The idea is to really make sure that we have good quality backlog, good the margins as well, and that's what we're focusing on.
Okay, we leave it at that. Thanks a lot for joining us and speaking to CNBC TV18. Appreciate your thoughts. Well, that's GMM Pfaudler. They're on track to achieve their revenue targets, and they're looking at some more inorganic acquisitions, some smaller ones in their business.